you need to do when you take a loss. Number one thing is do not enter another trade. This is key. When you take a loss, you're forced to enter in the same bias, or you up your lot size, you take the trade, or what happens is like you go into this cycle of revenge trading. I've seen this happen a lot of times. Some people are here, they were really active in the first week when they joined, and the second and third week they just went quiet, but they're still trading, right? You just went quiet. And when people go quiet, that's a sign of falling into the cycle of over trading, over risking, not knowing what to do. So when if you're taking losses silently, I would say speak out. Speak out. That's bad. It doesn't help anyone when you're in a dark room just stabbing yourself. It just makes no sense. So if you're taking losses, like I tell guys, hey, listen, if you're going to take two losses, speak up. Speak up about it, because most times what happens is that psychologically we're not ready to take that loss. Psychologically we're not ready. Like when we take a loss, that's like, oh man, I see these people winning all the time. How come I'm losing? How come I'm taking the losses? And if you don't speak up, you're not going to get better, because I mean, it may sound corny, but you need your voices to be heard. um, one rule, one rule I have when I take a loss is to at least wait for 1 hour candle. If I'm taking a loss, I'm waiting at least 1 hour candle to close. Because, if I took a buy and price went down, then maybe my analysis was wrong. And if price went down, it doesn't mean I'm going to take a sell right off the bat. I'm just going to wait. Because when you're taking a loss, you have triggered a very strong emotional state in your mind. A loss is something bad. It's it's bad for confidence. It means you're not a good trader. It means like things shouldn't be happening to you. So it's really important to just wait, because statistically, now I've read a lot about human psychology and emotions, and statistically speaking, when someone goes through a very, very strong emotion, let it be like happiness or sadness, it takes at least an hour for those emotions to die down. So you need to give yourself time emotionally to accept it, process it, and then make another decision. It's like when you give someone bad news. You give someone bad news, you're like, okay, well, let's just give them time, let them process the information, let them figure out like, what to do next, and then proceed with the next steps. Same thing here. When you take a loss, just step back. You've taken a loss, now you got to step back for at least an hour and really see what's going on. Because if you are wrong in the market, if I'm wrong in a market, that's a huge deal, because my family's bread and butter depends on trading. Like it depends on some other things too, but mostly it's trading. And if I'm wrong, that's a huge deal. So I have to figure out, why was I wrong? What was there that I missed? Did I miss something, or was there something I ignored, or was it just a probability loss? Like sometimes when you're taking a trade, and what might happen is that price may not have enough probability to go in your way. And at that point I say it is what it is. You just can't change that. Um, Always ask why. Whenever you're taking loss, just ask why. Why did this happen? Like if price was at, let's say, resistance, and you had candles coming down here, and then all of a sudden you have a candle that went up like this, always ask why. Why did this happen? What sometimes guys do is like they'll take a sell over here, and if they get stopped out, they'll take a buy like that. Like with a snap of finger, they'll be in a buy. But the main thing is to see, okay, why is this happening? Because when you sit back and ask why, that's when the learning starts. Then that's when you start learning. Because when you're asking why to things and there's no one to explain to you in the moment, you're making you're making assumptions on your own. And then based on those assumptions, you're making notes. You're making mental notes that, okay, maybe this is the reason it's happening, or like maybe, like, once this candle broke the high of the previous one, then it had to go up, because for price to go up, price has to make higher highs and higher lows, right? So if a candle is breaking a high of the previous candle, it would logically make sense price to go up. And then you're going to make a mental note about it. And you'll make a mental note about it and say, well, okay, this happened yesterday, and today, if this is happening again, maybe I can execute a trade, right? So instead of entering a buy right after you take a loss, what you've done is you've sit back and you've seen, okay, why? How? How is this happening? How can I enter this trade the next time it happens? That's when learning actually begins, because now you're in a very stable emotional state. Um, our next point is, what did you miss? Was there like a support, resistance? Was it like a candle with no wick at the bottom? Was the high time frame bullish and you took a sell trade? Like there are a lot of different things that you will learn the more you start asking why. Or how could you have taken the opposite trade? If you took a sell, how could you have taken a buy? Because someone took a buy. Like if you took sells and you lost, someone was in a buy and they won. Maybe you got to start to look at that. One mistake I see people make all the time is that, well, there are a lot of mistakes I see them make all the time, but like the main mistakes are, let's say if you have a support right over here and you have a candle coming down, one mistake is going to be that, like if a candle comes down bearish, if even if it closes like this, they'll take buys at support. They'll take buys at support because it's a very strong support, it's a daily support, so price is going to bounce. But sometimes what happens is, now this has happened to a lot of guys here too, that you'll be greeted by a big candle like this going further down, and now you're in a drawdown. So someone can turn around and say, oh well, that's a stop hunt. But what about the people who are in sell? If someone's in sells from up over this point, they're in massive profits at this point. That's not a stop hunt for them. That's like a continuation because they're in a sell and they're like, well, candles are bearish, so I might hold my sells, and then they get this candle coming down. So others look to see that, okay, so if you took a buy at support, did it really make sense? The candles were bearish. Yeah, they were closing above support, but there was no bullish candle. So maybe at that point you could say, okay, maybe next time I'm going to wait for a bullish candle to form. Because if you can get a bullish candle forming at support, let's say like this, then you can say, okay, now support has been formed, and maybe now I want to take a buy. Right? So it's really important to just always look to see that, okay, if I lost a trade, someone won a trade. What was there something that they saw which I didn't see? Right? So that's a little challenge you have to put yourself through. Accept that you were wrong and someone was right. Why? So it's the same point we went to previously there. Like, always look to see that, okay, how were they right? How, like, was I wrong, or what's there something I could have done differently? Um, so we're going to look at some examples over here. I've come up with some examples here, and we're going to look at these examples now. And we will look at these examples from a perspective of the taking the aggressive trade, because I think most losses, they happen when people take aggressive trades. So when you're taking aggressive trades, that's where most losses happen. So first of all, what's happening here is that price is bullish, right? At the same time, it's coming into this resistance area right over here. We are bullish. I think this was the 4-hour time frame. Price is at, like, like a potential resistance. So if a candle closes bearish, then there's going to be a better opportunity to take a sell, because we had candles, they start to come up over here. So they had clean candles, clean traffic. So then, like, we could have candles start to come down if you see a bearish candle right over here. Right? So now we have a bearish candle forming here. Now, if someone was to take an aggressive trade, they would say, well, okay, it makes sense to take a sell and anticipate the next candle to respect this high and then continue moving down, right? So let's say if someone does execute that sell, and let's see what happens here. The next candle forms like this. Next candle forms like this. It breaks the high, and someone might say, well, I'm going to remove my stop loss from up over here because this candle closed below these two candles here as well. So it still does make sense because candle now, next one may start to go down. So what happens next is we have a candle start to go up now. So at this stage, they might be like, oh man, like, what, now I'm going to draw down. I don't know what happened. So if we backtrack this, what really happened here was, now let's say you took a sell and you took a loss, right? So how could we see to take the correct trade, right? What could we have done to see that, hey, maybe we could have taken the correct trade. So let's take a look at this first. So basically what was happening was that before all these candles printed, you had price right over here, right? You had price right over here, and price created a fresh resistance here in this level, so we had candle that went bearish like this, right? So now when a candle goes bearish after bullish candle, you have resistance formed. This is a fresh resistance formed, right? You're like, okay, resistance formed, and the next one should go down. And what happens with the next candle? Next candle breaks the high of the previous one, and it forms a fresh support, right? So now you have a support formed, and when you extend it, you're like, okay, well, there was a resistance over here as well. And since price is in an uptrend and we formed support over here, maybe now if this is a 30-minute candle closing bullish, there's a chance that the next candle may go bullish instead of going bearish, right? This is what we learned in the webinar, which we did on the 17th May in the topic of candle trends. If someone who doesn't understand this, you'll have to go through the candle trends section, right? So then you're like, okay, well, if this is closing bullish, there's a high probability next one is going to go bullish either as well, right? So next one start to go up. So now you see how we have what we've done here essentially is moved this from up over here to down over here. Now it makes much more sense, right? So before we had it up over here, it made sense to say that, okay, well, I guess we're at some sort of resistance right over here and price may start to go down. But if you're following candles, you're like, okay, well, we had one candle closing bullish, then we had a candle closing bearish, and then we had another one closing bullish. So if that candle is closing bullish, maybe it's creating a support over here in an uptrend. So you're like, okay, perfect. Now I'm going to keep this in mind and I'm going to take it into the next trade. So now we've seen it, and now we're like, okay, now we have actually learned something from this loss. Because these things are going to happen over and over and over and over again. And the notes you're going to make when you take a loss, those mental notes and written notes, they will really, really help you identify these things. So let's take a look at the next example here. Let's see what we got. All right, so we have a candle that's closing bullish, right? We have a range here. We have a range up over here. It seems like we're creating some sort of a support, and it seems like the next candle should make a lower wick and continue to go up, right? This makes sense. Like we're in an uptrend, and price should, make a lower wick and start to go up and retest this high. I mean, that's going to be a better opportunity, and let's see what happens here. Oh, okay, perfect. We're starting to go up, and at this point, let's say someone has missed the move, right? Let's say aggressive traders took a trade down over here, right? And then this candle formed, and some people who were like, okay, you know what? We're probably going to wait. We're going to wait for a confirmation, and this candle forms like this, and then you're like, okay, perfect. Now I might want to take a trade, and then next candle forms like this. You're like, okay, well, we're still making higher highs and higher lows. The candles are still bullish, and there's a very, very high chance the next candle is going to come up to retest this range because, there's a higher probability for price to retest the higher low it makes. So perfect, it looks good. And the next candle happens like this, right? Now, either you had no stop loss, either you removed your stop loss, or you had a stop loss. In both three cases, in the first case, you were wrong. Because you had a stop loss, price came down, hit your stop. You're like, okay, I was wrong. I don't know what happened. And at the same time, if you didn't have a stop loss, then you're just purely wrong. So now let's take a look at this and say that, okay, how could we have anticipated that this price is going to go down, or maybe price is not going to go up, right? So let's backtrack this and let's take a look at this. So when this candle formed bullish, right, you had a really good entry to take a buy for price to continue to go up. Your risk from this point was down over here, right over here, and your reward was up over here, right? So let's say this was like, I think this was like 1-to-1. One-to-one stop loss is 1 and risk reward is 1. Then you have a candle that closed like this, candle closed like this, and you're like, okay, well, it should still go down. I mean, you can see that the wick is getting smaller, but it doesn't really matter because, next candle should continue to go up. And the next candle closes like this. Now when you had this bearish candle coming down after this weak bullish candle close, this one, now maybe this means that there wasn't enough volume in the market, right? It could mean that, right? There wasn't enough volume in the market because the body is small. So you start looking at these things. You're like, okay, well, for price to go up, you needed a nice, healthy candle. But what happened was you saw a very weak bullish candle that kind of like opened and closed at the same time. So maybe now you make a mental note to say that, okay, if I'm in a trade and if I see a weak body candle forming, maybe the probability of price continuing in that way decreases. So I might want to, like, reduce my risk or take some portions out. At the same time, when this candle is closing like a weak body candle, the range also gets smaller. So even though now your risk reward was 1 to 1, right? This is really important now, okay? Even though your risk reward was 1 to 1, and sometimes people get really stubborn in getting their 1 to 1 risk reward or 1 to 2 risk reward. I've seen it happen. I've seen people putting their TPs above resistance right over here, saying that, oh man, I don't take 1 to 1, I take 1 to 2 all the time. But logically speaking, that 1 to 2 is above resistance. We haven't broken resistance to get to that 1 to 2 risk reward. So now you're making this mental note that, okay, maybe this candle closed a weak bullish candle. Now maybe in the future I might want to secure positions or take profits and not being greedy or stubborn at the time. So now that's a learning that you're doing and figuring out that, okay, maybe small body candles mean there's less volume in the market to continue in that direction. That's how I learned. That's how you learn. That's how, when you look at your losses, when you start identifying how it did not work out, instead of saying that why it should have worked out, because like I see people, they argue with me all the time. They're like, well, I took this trade and it should have gone up. I should have done this, should have done that. Market doesn't have to do anything. It does what it does, and it's always right. And when the candle closed with no body, maybe make a note that, okay, maybe this means next time it happens, I'm going to be more careful about it. Would a better entry be after close of the first bullish? Yes, that's what I mentioned, after the first bullish candle, right? But we're talking about how to see how you could have taken the opposite trade, or how could you have been more safer. That's what we're discussing in this webinar. Um, all right, let's move on to the next example here. Let's see what we have here. All right. So price is bearish, right? I think we formed some sort of resistance right over here. We formed some sort of support right over here, and candles came down. They were bearish. We formed this big wick down over here. So let's take a look what happens with the next candle. Next candle has gone bearish. So before this candle formed, there were no buys, right? Because I mean, this is a big wick here. There's no buys. There's no sells because candles are not closing bearish. So there's no trade. Next candle forms like this, right? Now, by the show of, like, just like one word or whatever, what's the probability that the next candle will continue down filling this wick? Pretty high, right? Because you have this candle closing below these candles here, so you could say, okay, you know what? There's a very high chance next candles go down. This is actually a 1 hour time frame, right? This is a 1 hour time frame. So let's see what happens with the next candle here. If you go through the next candle here, next candle starts to go up. It attempted to go down. It made a wick going down, but next candle just went up. And now you're like, oh shit, man. Okay, this candle went up. What was there something I didn't see in the moment? What was there something that I missed, or there has to be something, right? So now we've taken this loss, and this is actually a higher time frame. This is a 30-minute No, this is a 1 hour time frame. So now we're going to go down to the smaller time frames to see some more information. This is a little bit of a advanced trade. So now this rejection, this wasn't the rejection. This was like a big range. So when this candle closed bearish, there was a very high chance for the next candle to continue down, fill this wick, and bearish, right? So let's take a look at the small time frames here. All right, so this move down. This was the big wick down, right? This was the big wick down right over here. Once this wick happened, you had 1, 2, 3, 4 candles close. So this was the close of the 4 candles, right? Once this candle closed like this. So once this was the close of the 1 hour, and then you have, no, this one right over here, and then you have 1, 2, 3, 4. So these are 15-minute candles. So what I'm going to do is I'm going to mark this candle down as 1. So just take a mental note of this candle as 1, and that one candle ended right over here. This was the close of the 1 hour candle. So if we draw a support and we're like, okay, well, the 15-minute candle closed bullish, even though the 1 hour candle closed bearish, but the 15-minute closed bullish, right? So if the 15-minute closed bullish, maybe should have seen some sort of a break below this area from the next 15-minute candle to go down, or maybe should have seen some sort of a like a rejection from over here to go down, right? So now if we're looking at the 15-minute time frame, it doesn't look like a sell after this 15-minute candle close, right? Because the next one started to go up because the previous one closed bullish. So this is the start of the next 1 hour here. This is number 2, right? So it started right over here, and the next one went up further. So now the cells are gone. There are no cells. And then this is the third 15-minute candle of the 1 hour. And then this is the fourth and the last 15-minute candle of the 1 hour. Looking at the 1 hour, it seems like it does look like 1 hour first went down, right? It does look like 1 hour first went down and then it went up. But when we really look at the candles, it seems like the last 15-minute candle went all the way down and then it closed all the way back up with the no wick on the top. Take a look at the 1 hour. Look here, no wick on the top, right? So this is how now you can say that, okay, well, even though after this candle close, it meant we're going to go down. But now when we look at the smaller time frames, there wasn't any confirmation it's going to go down unless this 15-minute broke the low of the previous 15-minute and you could take a sell with confidence to go down, right? So now you've done some learning here. Now it's not like, oh, why did this happen? You went in the small time frame to ask, why did this happen? How? Because you didn't expect this to happen. I would have never expected this to happen. I would have seen this in live stream and I would have said, all right, boys, time to make a lot of money. Let's take some sells. But then this happened. So always looking to see, okay, why? Why did this happen? This 15-minute candle closed bullish, which was the close of this 1 hour, and this is the start of the new 1 hour candle, which went bullish without breaking the low. This is why it's really important. This is why they say that that you look at the higher time frame trend. High time frame trend went bearish, so it made sense to go bearish. But then you look at the smaller time frame confirmations. So this is the smaller time frame confirmation. There was no confirmation for a sell, right? So now you've taken a loss, and you're like, okay, I'm going to take this learning process into the next trade, right? Let's take a look at the next example here. So you have price that's going bullish, right? You have bullish momentum, candles are consolidating over here, and then you have a candle open like this that closes like this. Now, what are the chances the next candle is going to go up? It's pretty high. Martin thinks it's really high. The rest of the gang thinks it's pretty okay. I don't know, but like it looks like it's really high. So you're like, okay, you know what I'm going to do? I'm going to take a buy and have my stop below the candle, and the next one is going to go up, right? Bullish momentum. And then you have a candle that breaks the low over here, right? And it closes bearish. Now, two things are going to happen. Either you're going to have a stop below the bullish candle and you're going to say that, okay, I'm safe. I had a good stop loss. I'm safe. But why? Why did this go down? Because we had these candles closing dojis, and then you had this bullish candle closing. Next one went down. Why? what was there something I missed? So now what you're going to do is now you're going to look at smaller time frames again for more confirmation. Gur Gurav said resistance. Maria said lower time frame. That's absolutely true. Now we're going to look at the lower time frame and see what was happening. So what was happening here was this is the lower time frame right over here, right? This is the 15-minute time frame, and this is a 30-minute time frame, right? So now what's happening is, oh, EJ. Yeah, this was EJ. You guys remember who took this trade? Yeah, so basically on the higher time frame, what we see is that there was resistance forming here, right? And then you had this candle that's closing above resistance, above these candle closes, making it look like, okay, now we're going to start to go up, right? But when we go down to smaller time frames, what we find is that, hey, maybe on the smaller time frames, we had this resistance here. Where's my box? We had this resistance here, and then what happened was, and then the next candles, they respected that area. You see this big wick up over here? This big wick up over there is from this candle right over here, right? On the smaller time frame, we did wick up, but we closed below resistance. So this is something that we missed, right? Something that we didn't see in the moment. So something that was missed, and then we tried to take a trade, and it didn't really work out. So it's very important, just go down to small time frame and see that, okay, what was there something I missed? What was there something I didn't see at the point? What about if we wait to break above the confirmation candle? Yes, that works. That works. But at this point, we're just looking to see that, okay, how could we have made the analysis better? And this just comes with practice. I don't expect this to come, overnight. It just comes with practice. The more you see it, the more you do it, the more I mean, look at your losses with excitement to see, okay, what can I learn from this now? What's there to learn, instead of just going in apeshit mode and start taking trades after trades and revenge trading. It's very bad and pretty sad at the same time. Um, all right, so we have this situation happening over here, right? This situation is happening, and we have a range right over here. Prices at a resistance over here. It seems like it's creating a support down over here. So we're going to see what happens with the next candle here. Okay, we have a little bullish candle forming right over here. Weak body, no buys because it's at resistance here, no sells because candles are, bullish. And then we have a candle that's closing like this, a bearish, right? If this candle is closing bearish, we know that there's a support right over here, and it's not enough range for this candle to go down. If someone was to take a sell over here, the other one can say, well, man, like there's not enough range over here. It's a small range. So a better trade might be below that support and coming into this range right over here. That would be a better trade, right? So let's see what happens here next. Next, you have candle breaking down, right? Candles breaking down over here. Now, what's the chance the next candle is going to continue down to fill this wick? I think there's going to be a very high chance, because that's something that we're looking for. That price is gonna, it broke down over here. It might make a like little resistance in this area and then start to going up because like price didn't really break above this resistance here. So like a retest, logically waiting for a retest would make the perfect sense to sell, right? But and the next candle goes up like this, and the next candle kind of like does it thing right here and starts to go up, and now you're like, oh man, like why did this happen? Why did this candle make a wick down, close below this area, and why did the next candle start to go up? So someone who's new, you might be like very disappointed in this because all what you've learned is that if a candle breaks below a support and it leaves a wick, that means there's range for the next candle to continue down. And you take that trade, you're like, you know what? I feel really good about this trade and I'm going to take this trade. You take the trade and then price goes the opposite way, right? And now you're like, oh man, why did this happen? Like, let's say if you had a high risk trade, you've lost more than you wanted to lose, or if you were over trading and this was your fifth loss, and now you're like, man, like these things does not make any sense. So now what we're gonna do is we're gonna look at it from a perspective that okay, how did this did not work? So now these are the smaller time frames, right? And this is the higher time frame. So we're going to look at this candle right over here, this candle that formed. This candle, when this candle closed, the close of this candle was this candle right over here. Because this was the first candle went down, next one went down to make a liquidity wick, and then it closed right over here. So essentially now what happened is maybe it's created a support at this point, at this candle when it closed, so we formed a potential support. So when the next candle formed, which was when this candle formed, this candle didn't have to continue down because on the smaller time frames, it created a support. So it went up and then it came down and it just started to make this start to respect the support. So now you're looking at the smaller time frame, then now it makes sense. Now you're like, okay, you know what? I took this sell, it didn't work out. Now if I look at the smaller time frames, yeah, okay, it makes sense. It makes sense that we created a support here and we wanted the next candle to go down, but it had to close below the support to go down and it didn't. So yes, that was a bad trade, right? So that's how you're looking at losses. Whenever people send me charts with losses, I always, always, always tell them, okay, go back to the chart, look to see how could you have taken the correct trade. How could and I'd say 80% of the time they come back and say, okay, man, I know exactly how could I've taken the correct trade, and that's a learning thing that's happening at that point. When you're over trading and revenge trading, there's no learning happening. You're just trying to fuck yourself, and that's no good at all. Like like we're all in this mentorship. We all do we attend webinars every morning. We do refresher webinars bi-weekly. And if you're just over trading and over risking just because you're taking one loss, that's not going to help you at all. So you always have to, whenever you take a loss, look back and say, how could I have taken the opposite trade? How could I have made this thing better, right? Um, let's take a look at this here. Now, over here, what's happening is we basically have a support, I think, right over here. We can't take a sell because we have kind of like a doji forming here. We can't take a buy because there's no bullish candle, so we're just kind of like waiting at this point. And when we look at the next candle, see what happens. Oh, next candle starts to go down. Next candle starts to go down over here. It broke support. So it would make sense for the next candle to kind of like create like a mini resistance and then continue moving down. But next candle rejects the area, right? And then we form some sort of support over here and then price starts to go down. So one thing I see people do all the time is that what they will do is that they'll see price go down, right? So here's what's happening, right? When you're in a group, right? And when you're in a trading group and people are in cells, you see candles forming, right? Candles are forming. And when this candle is forming, this candle is going down, it's retracing, going down, it's retracing, going down, it's retracing. And when it's doing that mini retrace, you take a sell. You're like, oh, fuck it, I'm going to take a sell, it's going to continue to go down. If it's something like gold or GJ or GPAUD or something that moves really fast, you're like, okay, you know what, I'm going to take a sell. And you take a sell. This is called a fuck it sell. And I'm guilty about this. I do this sometimes, and a lot of you people, you're also guilty with this. You do this all the time too. When price is moving fast, you take a sell. You're like, okay, we've broken the support. It's going to go down. I'm going to take a sell, and it's going to go down. Essentially, you're selling the low. And when you sell a low, what happens is that the next candle starts to go up. Now you're like, oh shit, I'm in a drawdown right now. So people send me charts at times too, and they sell the lows or they sell the highs. And that's a very bad practice because whenever price is making a low, right? Whenever price is making a low, that means it's trending down. You have to wait for price to create a resistance or something. Whenever price is creating a high, it means it's trending up, and you need to wait for price to create like a minor support to continue to retest that high. It's very, very important. So at this time here, if you're taking a sell down over here, you're essentially selling the low. And then you see price come up, and a more conservative trade is going to say is that, okay, this candle closed bearish here, so we're going to do the same thing we did previously. We're going to move this, okay, now it's creating bearish candle, there's a resistance forming, now it makes sense for the next candle to go down. And then you have a nice day, it comes down, you take profits or you secure profits or whatever you do, and price does what it has to do. But now you've learned something here, right? What you've learned is that, okay, I took a sell down over here. Maybe a better opportunity would have been to take a sell at a resistance, right? Or let's say you took a sell, or let's say you took a buy up over here and price retraced, then you could say, okay, well, maybe a better buy would have been when price formed like a support to go up, right? So, I mean, these learning things and actually waiting for things to play out is really, really, really important, right? Because what happens is if you took a sell down here, you went in a drawdown, you closed your trade in a loss, sometimes you take a buy. You see this candle close bullish, and you're like, okay, perfect. We've created a support right here, right? We've created a support right here, and now I'm going to take a buy for price to go up. But that's happening because now you're over trading. When you're over trading, your brain is running like a hamster wheel on steroids. Like it's just going really, really fast. You have a lot of emotions involved. You're like, okay, I took a sell, price went up, shit, I'm going to take a buy because, candle closed bullish and it formed support. But if you look at logically, price just made a low. Price broke the support here to the left, made a low. Now logically, price should respect that low. That would also be trading in a range. Yeah, but we're just looking at it from an example perspective, like from an example perspective here. So yeah, so it's just about the fact that how much you can look at your loss and see that, okay, what can I learn from this loss? Let's take a look at this example here. I think this is our last example here. All right. Now, there's a very high chance price can continue moving down, right? Because what happened was we created a support, right? This candle closed in the wick at the bottom, which means there was no range. So next candle formed bullish, right? At this stage, someone would take a buy saying that, okay, the candle closed bullish, there's a very high chance price will continue to go up. But at the same time, what would happen is that someone else could say, well, like, the candle has closed with a small body. So I don't know if there's going to be enough range. And the next candle starts to go down. And then someone can argue, well, okay, if we've broken this support, it would make sense for price to create some sort of a resistance and then continue moving down to fill this wick. That would be the most logical thing to wait for like a mini resistance, and then continue down to fill this wick. And next candle starts to go down. Perfect. Starts to go down. You're like, okay. And someone might say, okay, you know what? It's starting to come down. Maybe it's not going to make a resistance, so I'm going to take a sell. Yeah, see, it looks like it's in momentum. So we're going to take a sell because we already created a resistance here and price should continue to go down. But in reality, what happens is that you have a candle forming like this, and next candle forms like this, and then it starts to go up. And at this point you're out of the trade. You're like, oh man, this sucks. I don't know what was going on, and I'm not gonna trade anymore. Now once you're done, once you've taken that loss and you've not analyzed what's happening is now, can someone in the chat tells me what's gonna happen next here? Like what do you expect to happen next? Up or down? Like what's the probability of it going up? Probability of going up is really low, right, is really low. So why is because obviously everyone now knows is that, okay, we've made a low over here, we've made like a resistance, and this candle has closed bearish, left a wick. So there's a very high chance for the next candle to start to continue moving down. So at this point, this makes sense now, because now once price is made a low, once price is made a low over here, it just makes logical sense to wait for price to create a resistance in order for it to retest the low, right? At the same time, someone could argue that, okay, well, we had, let's say, let me see here. Someone can say, okay, well, we had a resistance right over here, right? Resistance right over here, and this candle broke above this area. Now this is a breakout candle, and the next candle should continue moving up because we got a clean range over here, and so someone's going to take a buy, and someone takes a buy, and the next candle forms like this. Now when you're in a buy and next candle forms like this, you could still you could still argue that, hey, the next candle, now there's a very high chance it's going to continue to go up because this little baby doji bearish candle closed above the support. But in the same way, this candle, I mean, it closed above support, but it's still closing bearish, and not neglecting the fact that we've made a new low. So let's suppose we're still in a buy here waiting, and the next candle forms like this, right? Next candle forms like this, and what happens is, let's say you had a stop loss and your stop loss was below this candle. Now you've gotten stopped out. Now you've gotten stopped out. So now you're like, okay, hold on, hold on, hold on. You had a buy, right? You had a buy. Your stop was below the candle because, oh, Raja said had stop below the candle, and you got stopped out. So now you got to look at it this way. Okay, I took a loss, right? I took a loss. How could I have minimized this loss? How could I have made sure that this loss was smaller so that it would have given me more room to take the correct trade later on? What's this question? I don't like questions in the middle of the webinar. In this case, shall we wait to see whether next candle breaks the low? Yeah. See, the reason why I don't like questions in the middle of the webinar is because I answer all the questions if people are patient. So just be patient, right? So So now you're like, okay, I had a stop loss down over here. How could I have made this smaller? So now when you look at it from a more logical perspective, let's say after trading is done and you're going through your losses, it's very important after trading you go over all your losses. If you're not going over your losses, you're not learning anything. And it's very, very crucial that you start learning from your losses, right? So you took this big loss and you're like, okay, now let's see how could have made this loss smaller. So you could say, well, for price to go up, right? For price to go up, it has to make higher highs and higher lows, right? And if a low of the previous candle is broken, that means price is no longer going to go up. Okay, so when you had this candle breaking the low of the previous candle, you could say that, okay, maybe I could have exited at that point. Because if I could have exited at that point, then I would have saved all these pips lost, and then I would have had enough room in my risk to take the correct trade, which was going down because we made a low and price has now created a resistance here to continue down. Right? So now you've logically looked at the loss and you've said, okay, how could I have made this loss smaller? Honestly, this is how I came up with all the methodologies I have to trade, because I've always looked at my losses to see how could I have taken the correct trade. I've always looked at my bigger stops getting hit to see how could I have lowered my stop losses, because once you start looking at these things, automatically your losses become smaller. You start taking less losses. Even though your wins are the same, your wins will stay the same for a very, very long time. Your wins are going to stay the same, but your losses are going to get smaller and smaller and smaller. Once your losses get smaller and smaller and smaller, your wins just start looking bigger. It's like you have person A and person B. Person A goes to the gym for a year. He gets decent size. Person B goes to the gym on steroids, for a year. He gets really, really big. But when person B gets off of steroids and he just continues the normal gym for the whole year next, now his body ratio is going to get a little bit smaller, and the person A is going to look much, much bigger. Now, I'm not sure if that was a good example or not, but I think that was a very, very good example here. So that's how once your losses get smaller, your wins are going to look much bigger. Even though if they're not increasing, they look much bigger. And with practice, you're like, with confidence and letting partials run and this and that, your wins are going to get start bigger and bigger. But the most important thing is always look at your losses and always see how, why, if I take a bigger loss, how could I have made the stop loss smaller? Um, it wasn't, yeah. So yeah, so those things are very important. Let's take a look here now. For conclusion, always look to see how it was the opposite trade. Now when we go into the next week and we start taking trades and some trades are a loss and whatnot, always look to see how could you have taken the opposite trade? How was it a bad trade? Whenever you take a loss, always ask why it was the opposite trade. Be excited when you take a loss, as it will be a learning lesson all the time. Whenever you take a loss, man, when I take a loss, I'm like, oh, perfect. I took a loss. There's something I missed. There's something I didn't know. So now that's an opportunity for me to learn, because if I can learn that after taking a loss, next time I'm going to make money on it, and that's exciting. Because that means now I'm not going to take a loss. Now I'm going to take a win, and that's going to turn into some, like monetary gain. Same scenarios will happen all the time. Learning from losses will keep you prepared. This is very important. Sometimes we win, sometimes we learn. Exactly. Mr. Halil here said it right. Like, you always learn. You don't always lose. You're always learning. At times you will have a perfect trade. There would be clean candles to the left. You'll have perfect support. Every time frame will say, it's a perfect trade to take. You'll take the trade, and then it'll be a loss. And at that time, there's no explanation, and you can just say, well, it is what it is. Sometimes it's just a probability of a loss. Sometimes it's just that little probability of you following your plan, then that 10% probability or 20% probability or 30 comes around and that trade doesn't work out. And you say, oh yeah, it was just a probability, it didn't work out. Like a lot of you guys, you send me charts and some losses, I just say, hey, yeah, it looked perfect. I would have done the same, but I guess the probability wasn't there, right? So I hope this was some sort of helpful to everybody. Tried the best I can to explain it in a very, very simplified way to see how could you've taken the opposite trade. Sometimes the setup is correct, but you can still lose. Yes, exactly. So this was recorded. This will be placed in the new database later on in the day. I would say look over it 2 or 3 times. Go through it 2 or 3 times, 4 times. I'm gonna look at this as well once or twice after we're done here. So what we're gonna do is we will now do some simulation here, right? So let me just pause this. All right. So what I'm going to do is I'm going to bring my browser at this area. I only have one browser open here.